Good morning, I'm Carol Harmer, owner and founder of Charmer Trading. This morning I'm going to look at the dollar index for you. If you look at this, you can see the dollar index completely made a base. We know that it's heavily weighted against the euro. I don't think anybody should trade the euro without first looking at what the dollar index is doing because of many things, okay? Because it's so weighted against the euro, and all of the markets, all of the traders, all look at the euro. Everyone's into the euro against the dollar. Very rarely do you see somebody look at the dollar index. Now that normally leads the way. Well, I think it leads the way. That's all that matters at the moment. Okay, so what are we above, or what have we got? You can see this high here that was captured by the 55-day moving average. Okay, and this high occurred on the 5th of November. Now that 55-day moving average captured it. Down, up, couldn't break it. Okay, the high on the 5th of November was 136. Now, if you go across to here, you'll find it on the 21st, it was 139. Okay, so a little bit higher, nothing to write home about. The important thing to note here is the fact these moving averages, okay, you're getting the 18-day and the 50, 55-day there at this point. So even if this market comes lower, you've got excellent support down at these lower levels. The weekly chart shows that you can go back to this 23.6 fib, which I'll point out to you now. That is on the weekly chart, and that's coming in at 99.44. You can come back to here. You can come back to the moving averages. Bit worried about the stochastics, bit worried about the DMI. The RSI is a bit iffy. But all the while, this can maintain strength above this area here on a weekly basis. Then I think we go higher. Obviously, markets change, which is why I tell all my students, look at it daily. Look at what the market's doing. Look and see if you can get that edge. Okay. Looking at the euro, I think you've still got that big top in place. Let me just show you. You've still got this. We have got to break that trend line. We've got to then break that 55-day moving average. Okay, we need to do that. Actually, I think that's a 200-day. That's coming in at 114.09. We know the levels. 114.60 is a sell. Okay, we know that. Watch for a bounce. Just be very careful when trading this market. You can stay long of it as long as we don't break 14.60. I call it stop reverse. You can call it what you want, but what you need to do is be aware of it isn't a case, if that breaks, of buying dips. It would be a case of selling any longs you've got and reversing the trade. Easily said than done, I know, with market mentality, but that's what you need to do. Okay, that's all from me on this particular market. I will catch you all later.